In this video, we are going to talk about the new opportunity provided by SEBI, Specialized Investment Fund, SIF. Before starting to go in depth, let's understand the challenges faced by mutual funds and PMS. Traditional mutual funds are heavily regulated and cannot take short positions and hedge risks efficiently. PMS has a minimum investment of 50 lakh Indian rupees, and this makes inaccessible for many investors. In a falling market, traditional mutual funds cannot hedge efficiently, leading to significant losses. PMS accounts typically have lock-in periods and restrictions on withdrawals. Mutual funds don't use derivatives for leverage, limiting their potential gains. Now, to face all these challenges, SEBI has introduced a one-stop solution known as Specialized Investment Fund. Now, what is SIF? SIF is a mutual fund-like structure with features of PMS and mutual funds blended together, with permission of allocating 25% in derivatives and allows the fund manager to take long and short positions. Now, the highlights of SIF are: the minimum required investment is 10 lakh rupees per PAN. Limited redemption cycles when compared to traditional mutual funds. Just like traditional mutual funds, this SIF is categorized into equity, debt and hybrid. Now let's go in depth about the categories of SIF. There are 7 categories of SIF launched by SEBI. Equity Long Short Fund, a flexi-cap fund with 80% exposure in equities across all market caps. Equity X100 Long Short Fund with at least 65% of the exposure in mid and small cap stocks. Sector Rotation Long Short Fund, a sectoral fund with at least 80% exposure in equities with investments at least in 4 different sectors. Debt Long Short Fund, a dynamic bond fund with long and short positions across different durations. Sectorial Debt Long Short Fund requires investment in at least 2 different sectors with no single sector exceeding 75% exposure. Hybrid based category, Active Asset Allocator Long Short Fund, a multi-asset fund with investments diversified across different assets. Hybrid Long Short Fund, a balanced advantage fund with at least 25% in equity and 25% in debt. Okay, now let's talk about the risks and benefits of SIF. How can 25% exposure in derivatives help us? Provides leverage to enhance the returns on the long side. It allows the fund managers to short stocks or sectors to capitalize the market when in downturn. Enhance risk management strategies. Now, what are the potential risks? Double-edged sword. While derivatives amplify your returns, it also increases the risk. Market volatility. A sudden downtrend can lead to significant losses. Redemption restrictions. Unlike mutual funds, SIF has certain restrictions on redemption. Now, who should invest in SIF? High net worth individuals, investors who seeks to invest in derivatives along with portfolio diversification, experienced investors comfortable with market volatility and exposure in derivatives. To get more insights on your finances, follow JD Wealth.